Hi everyone, Jeff Yastine for Total Wealth Insider. You know, Warren Buffett has often said, be greedy when others are fearful. And there's no better example than that, than what we see going on in European equities and specifically European banks right now. To most investors, the region is just too hot to touch. You know, the concerns over trade tensions with the United States, as well as concerns over Italy's new sort of populist leaning government, sort of make it an area that many people will think twice to invest in. But you know, the great thing is, if you're looking for value, that's what happens when people become fearful. It creates great values in specific categories of stocks. And I see one particular great category to look at right now in the way of European banks. You can invest in it through a particular ETF, the iShares MSCI Europe Financials Sector Index. The symbol is EUFN. It's a great play, a great way to look at it. It's a cross-section of 82 banks and other financial companies across the Eurozone and England. Trades for about 21 and change. And with a price to book value of 1, this European bank ETF is basically trading for the cash that its institutions have on their balance sheets. And yet, just the purchase alone will net you an annual dividend yield of about 3%. So what we have right now is what's come to be called the European doom loop. So what happens is a euro unfriendly government comes to power, such as we saw in Italy. And of course, investors then worry about the disintegration of the Eurozone, and then European bank stocks end up tanking. And that becomes the opportunity for value investors like us. So despite all the, the wall-to-wall coverage and no small amount of hand-wringing from analysts and from pundits, none of the developments regarding the supposed disintegration of the Eurozone has happened. For the last year's fourth quarter, Europe's GDP rose at its fastest pace in a decade, an annualized rate of 2.5%. That was faster than the U.S. had in that same quarter. And though things did slow down a bit in the first quarter, the Eurozone is still on track to grow by about 2.7% for 2018, and it did rise by about 0.5% for the first quarter. I expect more of the same here in the second quarter. So, the growth will continue, and no small amount of worries over the intentions of Italy's populist government will wind up being more than a temporary distraction. For me, and I believe for you, European bank stocks represent a great bargain and a good dividend, and they're worth buying now. Remember to keep watching us on our YouTube channel, as well as on reading our material on banyanhill.com. Remember to like us on all of those avenues. I'm Jeff Yastine for Total Wealth Insider.